My name is Behncke. I'm the Executive Chairman of Whole & Global Investments. We're a funds management company. We kind of look at the whole kind of global sort of innovation space, kind of particularly the digital space. We've launched one of our funds over the last month or so that has a keen focus around this. And we've been looking at the whole kind of global space for a long time, particularly kind of crypto and blockchain, the whole sort of Web3 thing starting to sort of move through, particularly around the business models of Web2, all the social kind of media sort of platforms, their scalability, all of those things which make kind of business sense to us from an investment point of view. So on June the 18th, when Libra was announced, apart from being a little bit surprised that it was announced this early, we certainly saw it as Libra really providing a catalyst for crypto and blockchain and the evolution of the digital currency realm really moving into the mainstream. We were pretty excited by that, so we went through all of the Libra documentation, had a bit of a look at what they were trying to achieve, who the members were. They had opened up everything for application in terms of membership, where all this stood, and we sort of came to a conclusion that there were a number of challenges already. If you look at Libra and you look at the membership there, as kind of Bradley was pointing out in terms of MasterCard, Visa, PayPal, Uber, you've got some fairly big names, fairly heavy hitters in this space with some fairly serious reach. And so that's an interesting construct in the sense of when Facebook starts to, if you like, hand over the reins to Libra because they're in this, kind of 6 to 12 month period of helping to get Libra up. It really will be a not-for-profit kind of governance arrangement where Facebook is really just one member. In terms of if you wanted to be a serious part of the Libra conversation, how do you end up getting membership to this Libra group? Well, I'm not quite sure if anyone has looked at some of the application requirements in terms of business, sort of university, social impact. The bar is exceptionally high. We also noticed in the Libra Association that there's no governments or banks. They make it very clear that they're looking to support the ecosystem. They're looking at, in a way, trying to have a bit of a grassroots approach while being kind of bootstrapped by the big end of town. So when we looked at this from an investment point of view, we looked at this from an innovation point of view, we kind of made the assessment pretty early on that this might have legs. Whether you love it, whether you hate it, the innovation is here. They have a plan, hopefully over the next kind of 5 years, to sort of roll this out in a bit of a sensible way. All of the technical detail I'll leave to these kind folk. But really what we looked at is we felt as though that Australia really needed to be part of the conversation, particularly what's happening in our financial services sector at the moment, and particularly what's probably going to impact them at a local level with kind of regulations and all of those sorts of things over the course of the next couple of years. When we looked around and said to ourselves, well, who will most likely take up the mantle? Who will most likely seek kind of membership and be an active part of this? We sort of realised that really the only way to do this from an Australian context is to have a consortium of partners who can really sort of build in the capability and meet some of this high bar stuff so that we could have a chance of success of being able to get at the Libra table. We see that the risk of Australia not getting a seat at that table and being part of the conversation is that we will miss out on a lot of stuff. We will also have a lack of sight into what really are the impacts and the challenges as all of this evolves. And of course there's a number of details to come out in terms of kind of privacy and regulation, all of those sorts of things which, having been involved with government for a long time, is often a movable feast. So you need your finger on the pulse. We kind of bandied this around a bit to some of our friends and other kind of business partners around the whole concept of establishing something like Libra Australia and just seeing whether we could collect the interest and the partnership around this. And to our surprise, or maybe not, there was a lot of interest. So we got a bit of a working party up, as you'll see on our website. We draft up a little bit of a paper, which is really just kind of setting the scene as we see it about some of the steps that we need to undertake in order to hopefully secure the objective to obtain membership to the Libra group, as well as hopefully to operate a node. And that's kind of where the conversation starts. We see Libra Australia as a vehicle, if you like, to have the conversation. We feel as though there's not one person or kind of organisation which is going to have their head wrapped around this, but certainly what we feel through all the conversations we've had over the last kind of couple of years, and and knowing Tim and Rob and a whole kind of host of others, is that we've got an incredibly large proportion of talent in this country who can probably tackle this in ways that we can't even fathom at this point in time. Let alone all of the policy issues that our government's going to have to grapple with, that our regulator's going to have to grapple with. There is just so many questions that come out of this that we felt that a good place to start was at least to have a vehicle to allow those conversations to happen. So here we are, and thank you very much.
So Heath, I would like to give you the opportunity to introduce yourself and share from your perspective also why Libra Australia and why now, and where you see things evolving potentially from here if things go well.
Yeah. So I'm the twin brother of Luke. You see, we look very similar. But while Luke's been in government and policy around the education sector, the automotive sector, etc., CEO of a non-for-profits, etc., for 20 years. I've been in financial markets for 20 years, running investment funds. And actually, I started talking to Luke about the potential for change that was coming. This happened probably about 3 years ago. For a lot of people have gone down that sort of crypto rabbit hole, started looking at the potential for change that due to distributed ledger technology and blockchain. We formulated a plan. We kicked off Whole On, and as Luke says, we run a global fund that's focused on innovation and disruption. So if you think about the context of this, we've got investments in Visa and MasterCard in that fund. We've got investments in Xero. We've got investments in Google, Amazon, Tencent, Alibaba, etc. So we've got this focus on this space, particularly with what's happening to payments. But more broadly to our investment thesis is very much that Australia is heavily overweight financial services. You can see that in just the way our exchange is structured. 35% of by market capitalisation on the ASX is financial services related companies, and we've only got a very small amount in tech. It's like 3% now, and even that 3% I wouldn't even define as technology in some elements, major elements actually of that. So what you could see happen in the last 10 years, that the global returns were exceeding the local returns, and a lot of that's driven by what we're seeing with these major digital platforms with this Web 2 conversation that's going on. So the Whole On Floating Funds kicked off with that focus on a lot of our businesses are benefiting from that centralisation and scaling of data, but solving that issue that Australians have to being underweight this space, where a lot of this is just originating offshore. We see more of this actually happening, with the Airbnbs and the Ubers, models like that. We do have a plan, kind of interestingly down the track, that we're looking to, for a retail managed fund, look to actually put some Bitcoin into that fund down the track in an institutional grade way, so representative of what's happening in Web3, what's as digital gold. So keep in mind when we have this conversation, we do see what's happening with Web3 as well, where that's coming, and that's very important from our perspective, running a fund like we do, because that's where the potential change can actually come about. But if I put my banking hat on, so I'm an actuary by trade, and when I joined the market initially, they all said, "Oh, well, you're an actuary, you're going to know something about banking and financial services," so you get thrown into it. And so I've been covering Australian banks and investing in Australian banks for a long time. And when we started looking very closely, and we knew Facebook was proposing something like this, but we didn't realise just the extent to which what they've actually proposed. And the innovation is substantial, as Luke's indicating. That's why to be able to actually enable payments near instant, near free payment transfer globally is a very substantial thing, which we believe we should support for many people around the globe. But the other things it does create is, which a lot of people haven't really focused on a lot, it creates a risk-free asset that's a new risk-free asset, which is lower risk than anything we have access to today. And you can see that by the way the Libra reserve will be actually constructed. So to give you an example, if the Libra reserve was constructed in such a way that was weighted with global GDP in mind, we might, as Australians, have a couple of 2% or 2.5% in that reserve. If Australia goes belly up, you're still going to have 98% of your money. Now, this is a very substantial thing, change. And in banking, when you're looking at banking, it's always, generally it's been a domestic conversation that you always were looking at the regulations, the regulatory settings, but now we've actually got a global conversation coming about because of the global digitalisation of financial services. And this is what we'll look back, I think, on the 18th of June and realise that that was the start of this process. We don't really have scalable global financial institutions today. The other thing that we find has got a little bit that hasn't got a lot of coverage is that the Swiss have actually recognised the innovation, and it's been discussed with all the lawyers saying it will be, you can see when you read the documentation, it's very clearly it will be a payment token. And the question, so the reserve will get up, the question is who actually engages with it. Now for Australia, our largest sector is financial services. It's 10% of the economy. And Josh Frydenberg was out there today in the paper talking about that. So it's very important that we're part of this conversation. Although we support the innovation because we see what it can deliver, we want to be part of that discussion. And that's why Luke and I always thought, we are posing a threshold question to Australians. We're actually saying, look, it's really important that we are part of this conversation because there are actually opportunities that can actually come out of this.
Okay, so I'll just make the observation that Australia has always historically been a leader in innovation, but definitely not so much a leader in commercialisation and full realisation of the potential of that innovation. So I think that's something that's worth considering as we have this conversation too. So Rob Morris.
Hey everyone, I'm Rob. I've been involved in the technology industry since the 90s. And my professional background is as a software developer. I built a lot of companies in the innovation space, and these days I run a technology consultancy that helps corporates to innovate, working with companies like Westfield. I think that Libra is a really interesting innovation from a technology perspective. It's going to be very interesting to see how it rolls out into the world, but everyone involved in Libra Australia believes that that's going to be something that potentially has a big impact, and we want to have a voice at that table.
Thank you, Rob. And now to Tim Lee, CEO of Fractonium, and a veteran of the blockchain space in Australia compared to many. So Tim's been watching the evolution of the space, and great interest to hear your views on where this all fits in.
Yeah, I mean, these guys have said everything that needs to be said, I think, almost. But, I mean, from my point of view, I mean, we're creating a digital corporate funding platform that's going to turn corporate banking on its head, and very much a regulated structure. And I think the key thing is, I think cryptocurrency is amazing. It's absolutely amazing as the initial innovation. We've got, on the other side, we've got the regulated structures that have been around for many, many years and are intrinsic in the fabric of our society. And I think, essentially, Libra fits that bill to go across both sides to a degree, in terms of it's not taking completely the banking route, and it's not taking the pure cryptocurrency route, but it's somewhere in the middle. But I think the power that it will ultimately have is beyond compare. Whether it's Libra or a clone thereof. I mean, if Libra doesn't get approval through the Congress, there'll be somebody else that will do it out of Europe, and they'll say we won't deal with America, whatever it might be. But I think the power is absolutely incredible. And there's one key statistic that I would bring to mind. The World Bank, in their remittance report for the first quarter of this year, highlighted the average cost of sending $200 internationally is 7%. Okay? So $200, that's $14 to send $200 on average. The banks on average, according to this report for the first quarter of this year, charge 11%. Post offices are 7%.
And I'll use your money for 2 or 3 days.
Yeah, I know, absolutely. I mean, yeah, exactly. I mean, that's another issue. But the key thing is that if you leverage the blockchain structures and the cryptocurrency style structures, and I know this is not a pure cryptocurrency, and George here is giving me a filthy look because he's very much quoted on that before, and I totally respect and understand that. He's laughing because it's true. But the key thing is, if we get those fees down to something like 0.1 to 0.5%, right, that's an amazing change. And if you think of all the expats that send money back to the Philippines, back to Bangladesh, back to India, there's a big, strong narrative for that. That's very powerful. And also, there's a use case that I've told a few times to various people, so if I'm repeating this, I apologize for boring you, but in Amsterdam, there's a coffee shop, not those coffee shops, the normal coffee shops, and they have the capability at the end, at the till, you can pay a tip to the barista, but you can also pay a tip to the Ethiopian farmer that produced the coffee you've drunk. Now just think of that for a second, right? If you've got a structure within your Facebook app or whatever it might be that enables that to happen, how many of you would pay, how many of you drink coffee every day? How many of you had 2 cups of coffee a day? More. Okay, all right. But how many of you would pay a 50-cent tip to the actual farmer that produced it in Ethiopia? Right, okay. Now just multiply that. How empowering is that? 50 cents to us is nothing, right? Or as a startup, it's a lot of money, but that's a different story. But for most of you, it means nothing, right? But to an Ethiopian farmer, it's powerful. So the empowerment that this type of structure will bring is incredible. And I think for less developed countries, it will open up new channels, new markets. It'll take a lot of people out of poverty. And I think, I think any technology that actually achieves good like that is absolutely worth pursuing. And of course, there are lots of issues relating to privacy and that type of thing. So it needs to be a balanced view. But if it produces the good to help the world, I mean, we always talk about technology changing the world and that type of thing, but if it does some good, that is something worth getting behind. And when, and I've known Heath for a while, and I feel very honoured that he's invited me to be an advisor on the team. It's such a powerful voice that we all need to have, and Australia needs to be part of that voice. So I'm fully 200% behind Libra, behind the guys here at Libra Australia, and I'm really happy to be involved.
Yeah, thank you, gentlemen. And picking up on that point, Tim, I think Australia and Australians have always been very generous people, and we are cognizant of our great fortune to be in one of the most amazing countries on the planet, to have the bountiful resources that we do and the great quality of life that we do. And there is this opportunity for us to work in a framework that does allow us to extend out into the world and empower other people and help the rising tide that lifts all ships, so to speak. And if we can play a role with Libra in Australia to do that, and in terms of our integration in the financial services globally, how we can set some great examples for that. So I suppose on that note, I would like to ask about what you see the opportunities are going forward for social good, but also for Australians in their everyday lives perhaps, or what it means for convenience, greater access to international services, and if we look at Web 1.0 as the Internet of Information, Web 2.0 is the Internet of Communication and Socialisation. Now with Web 3.0, the Internet of Value and the recognition of value and exchange of value. I'd be interested to hear your thoughts on where this is going.
Just a quick comment. This is very, very interesting in the sense of if you can send money anywhere around the world, whether it's across the other side of the world or the person sitting in the next chair, as easy as sending it anywhere else, all of a sudden you change the space that everybody works in the sense of that the world shrinks. In the sense is that if I can send money to you or send money over to Africa, if I can afford to do that, if I can support a charity, if I can support someone's business or a startup just as easily here as I can over there, all of a sudden that creates a lot of opportunities. And probably sort of opportunities that we're not even aware of at this point in time. And that's really interesting about the whole kind of innovation space, is that we just don't know what we don't know. What will these sorts of things do? How will that affect, you know, kind of micro finance for people in sort of third world countries, or even here? As soon as you start freeing up all of those costs out of the system, all of a sudden you have more money floating around the system. You have more kind of potentiality to do a whole kind of bunch of stuff that you were originally kind of limited by. So what I'm sort of interested in this sort of conversation as it unfolds is all of the policy, the regulatory sort of opportunities, the job, the market, the business sort of opportunities that might unfold as soon as we start to take the burdens out of the current payment systems that we have. I find that really exciting because we sort of venture out into that unknown. We make local kind of global and global local.
Yeah, great point. And one thing that struck me, particularly looking at the list of founding members of the association, was seeing Kiva on board, the micro lending platform. For those of you not familiar with it, Kiva is a microfinance platform where people can put forward their situation, their business case, whether it's a mother in an African nation who wants to fund the purchase of a sewing machine, or these kinds of things, where you can directly go into this market and find projects that speak to you and you can fund them. And it still goes through the traditional payment systems, but them coming on board to me indicates that there's this willingness to really extend that further and give everyone this democratic direct access to lifting each other up. And I'd be interested in your thoughts on that, and also some of the other possibilities that might be possible from all of this. Yeah.
So I think what we see all the time in our portfolio when it comes to innovation, it's kind of what Luke's alluding to. It's hard to, when you make money near free to transfer globally, it's kind of like there'll be things that come out of that which are really hard to predict. You know that. If I again sit back and look at the way our current system's set up, and where everybody's got their views on fractional reserve banking, got views on how all that's set up, there may be a possibility with the digitisation of financial service, the movement to central bank digital currencies and the likes, to actually be able to address risk in our system in a way that's very different than the way we address risk today. And you kind of see in some ways what this has come about, the opportunity in some ways presenting itself, because the way we're actually conducting ourselves today with capital and compliance to guard against, as we all know, it's been a very long down cycle in interest rates and borrowings are quite high, and you've got these concerns about, of course, what happens if interest rates rise, or what happens if we had a downturn at this point in time. And a lot of what you're seeing is, particularly coming out of the GFC, has been effectively this movement to substantial amounts of capital and risk and other measures that have gone into the system has led to our system being very capital heavy and compliance heavy. The digitisation of financial service may actually enable us to actually start to actually make the system more capital efficient. Might make compliance more of the system far more efficient in the way it's actually done. You can see this because in some ways fractional reserve, or the current system we have, is a function of physicality, and regulations by their very nature tend to actually, you want to safeguard the system, and then what we've seen in Australia, for instance, is just the dominance of 4 major banks. But that's come from a natural response for how our system's structured. But with digitalisation in financial services, you can start to actually change that framework. And we might even be able to introduce competition and reduce risk, which is actually kind of something that is kind of going the other way. You kind of ask yourself, why have we had a Royal Commission? We've had a Royal Commission because partly, and I don't want to blame the regulators, just it's a response to what happened around the GFC. We know that. So it's kind of like, and the regulators and our Council of Financial Regulators are doing everything they can to safeguard our system, right? But there's very blunt tools with which that can be done today. But there is a possibility that we can actually reimagine this system as we actually digitise. You actually can change things. So that's a big question. There's a lot actually unpack actually in that. But in some ways, the regulatory arbitrage that's coming here has come about because of what's going on in our current system. That's why, in some ways, crazily enough, is that running the nodes, you're going to be actually funding the system that we're running. That's, I think, something to strive for. We can see that, in particular, I think one of the biggest things that will bring forward conversations is about central bank digital currencies. And really, you'll start thinking about the actual ability, it's like an NBN conversation for replumbing the system. Can we do things more effectively, more efficiently? But ultimately, it's about risk. How do we actually, particularly in financial services, it's all about risk. How do you actually, being able to quantify, calculate, and work out that risk? And that's something that I see great promise in, which can actually benefit a lot of people, make financial services far safer, make systems as a whole far safer going forward.
I've been tooling around with Bitcoin since 2008, which is before some people think it existed. And I think, whenever you're dealing with innovation in a space, which we are around digital currencies in general, you need to experiment. There are different approaches you need to try. And I think it's good to have multiple horses in that race, right? It's around us figuring out what the future looks like. Now, if you look at I guess, brick and mortar industries, in a whole bunch of different industries, we've gone through about 20-something years of massive digital disruption in that. And you see the same patterns echoing and repeating again and again. And so I would argue that let's say the digital currency movement, without using specific buzzwords, I would say that is another wave of that innovation, that we're rethinking how we think around certain fundamental things that we've always done differently right now. And so that lasted for quite a long time with internet. It continues today. We saw that with mobile technology. We'll see that with artificial intelligence. And we're seeing that with digital currencies as well. So if you look at, for instance, the banking infrastructure as an example, that's built on really old world approaches, right? Like you talk about it being based around the physicality of money in the past, and that's true. I guess to kind of explain why that's interesting, I'm going to use a metaphor from a different industry, right, which is the publishing industry. So some years ago, I was dealing with multinational publishers who'd always made books, right? And books are a physical, real-world item. So if you looked at the database of a publisher, they would have about 400 different fields on a book, right? And most of those fields are weird combinations of other fields, and that's because it existed before computers, where you could easily combine things together. And so they knew that digital disruption was coming to that industry, and they knew that would transform the whole way that they produce content, that they deliver content. But because they were sort of trapped in that old world of thinking and bound to the properties that they'd had to deal with back then, they couldn't see beyond digital ebooks, right? And so what largely happened is they failed to actually embrace the new technology, and they failed to be able to actually do it. Now, of course, when we think about publishing today, that includes things like, if you want to teach people, for instance, and educate them, it's not putting a physical book in front of them, and it's not even necessarily putting an ebook in front of them. It might be making a game that teaches them. You look at that as how it applies to money, right? And we have the same thing. So we have this infrastructure that was based upon a banking system that's evolved over hundreds and thousands of years to some extent. And we've never been able to do before what we can do today, but we're exploring that space. So imagine a financial system that allows organizations and people to publicly publish how you can interact with them in ways that you can integrate with, right? So I think if you look at the promise of, say, Ethereum, that is part of what Ethereum is trying to accomplish, is to be a public space that anyone can publish financial automation to and integrate with. And Libra is the same thing from a different angle. So once you can do that, you imagine any institution that exists in the world, right? Imagine Centrelink, and it wants to make payments to a bunch of people, It wants to verify it's paying the right people. It wants to do that efficiently and cheaply. And ideally, you want to be able to do that in a way that you can verify in real time that you're doing the right thing, right? So that's really hard with the existing infrastructure. It's a mess. We can make that easier by making it digital. Now that's, in some sense, that's the promise of cryptocurrency generally, right? But one of the big problems with cryptocurrency from the point of view of looking at it as how do we take this forward as an infrastructure that's public infrastructure that everyone can use, that's regulated, is that it didn't set out trying to solve those problems, right? It set out to solve different problems, which I think are also important, right? Like the people that first talked to me about Bitcoin were crypto anarchists, and they were interested in censorship resistance and decentralization and privacy, and they saw a problem there that they wanted to solve. But we all know that our financial ecosystem can't work with that, right? It's like a thin line between regulation and privacy. That we need both, right? We need something that actually can be used. So I think one of the most exciting things around Libra is that we're getting organizations that have a long history of actually being able to drive innovation technologically, getting into the fray here and trying to figure out how we can solve that problem. And so what does that look like, right? Well, right now nobody knows how we're going to make it regulatable, how we're going to make it adequate from a privacy perspective, what's that going to look like economically? These are all open questions. But what I'm really excited about is we're now having that conversation in a way that might actually get somewhere interesting. And I think that that will potentially change the face of how we do things, right? Which is going to happen anyway. It's just a question of how. Libra is a good attempt, at least a good opening attempt to think about how you might solve some of those problems in a way that's accessible and that people can interact with it properly.
Yeah, it was fascinating to watch the US Senate and congressional inquiries and the 9 hours in total of question and answer, and the frustration mounted as I watched it live at 2:33 in the morning, and I was just like, these dinosaurs that have no concept of what they're actually confronting, and it's like, really, come on, couldn't you have got some advisors to actually brief you before you rushed into this hearing? So it was like, yeah, the regulators, I think in most jurisdictions are across a lot of these issues, but they're a bit hamstrung by the elected representatives, the lawmakers, who are for the most part non-technical, and they do have a lot of catching up to do. And if nothing else, Libra is the straw man that's going to get soundly beaten with sticks until some kind of semblance of comprehension emerges. So I know, Luke, you've had a bit to do, but Tim, I know that you've thought about this as well a lot in terms of regulatory impacts. Yep.
Let me just ask the question. How many of you have written a handwritten letter, not a card, in the past 2 years? Okay, about 5%, well, about maybe 5-10%. So if you think back, I mean, how many people first signed up with Hotmail when it first started? Okay, right, we all remember when we started with that, right? And that was the first true liberating use case for the internet. And I think what we're seeing with Libra or something similar will be the Hotmail for international payments. It'll make it really easy to actually implement, use, and exchange. Because how many people here have got a MetaMask wallet with Ethereum? How many people find that easy to use? Right, okay, let me rephrase that question. Besides the nerds, how many actually find it really, yeah, I mean, it's a nightmare. Yeah. But it's a nightmare to use, the usability on current cryptocurrency type structures is very difficult. And I wish it was better, I really do. But if we've got a structure that Facebook is committed, for example, via WhatsApp, via Messenger, Instagram, Facebook, whatever it might be, and they make it easy to use, all of a sudden, all the retailers will accept, let's call it Facebook Pay for sake of example, let's keep it really simple. They'll accept it. And if you actually get Facebook, if you get Libra coins that you're actually paid for work or whatever it might be, then you can actually exchange it directly for goods and services that you want. No exchange rate risk. Zero exchange rate risk because you're using Libra currency. Now that's just something that came to my mind thinking about it today, which is probably sad. I should get out more maybe. But it's these sorts of ideas. It's just going to empower so many things. And I think the Hotmail for international payments is really where I think this is, if you just think of that parallel, because it actually embeds the technology into the payment structure. Right now, you have to go outside the payment structure into the banking system. It takes 2 to 3 days to get your money across from internationally, which is insane. It's quicker. I mean, I've got money in the UK, on the south coast, in Brighton, on the south coast there. It's quicker for me to fly to Heathrow, drive down to Brighton, go to my bank, drive back to Heathrow and fly back to Sydney than it is to go via the banking system.
And depending on how much it is, it might cost less too.
Yeah, indeed. I haven't got that much money. I wish I did, because I'm paying you too much. That's what it is. No, but that's the thing, all right? I mean, in today's world, when yesterday is already too late, you know, it's insane. And I will just have one final little anecdote. I'm sorry, I'm being a bit boring here, but I was lucky enough to speak at a conference in Malaysia back in 2017. And there was a guy on after me who was in the financial services sector. Admittedly, it was insurance, but you'll get the parallel in a second. And he was looking at a blockchain play into the insurance space, financial services. He had just taken on board 3 temporary contractors. What was the average age? 22. 26. 18. No, the average age was 75. Okay? The oldest was 82. They were paying them $5,000 a day US to come out of retirement because all the legacy systems were dealing in COBOL and Pascal, languages from the 70s. All right? So they were still working with that sort of legacy technology. Right? And you know, the banks have similar, I mean, you'll be able to talk better to that, Rob, I'm sure, having been deep inside a lot of the banking systems. But you know, they're probably not as bad as the insurance companies, but they're probably not far off.
There's a lot of layers in there.
Right, okay. So it's one of those things. This is taking, this whole digital transformation is just going to be completely transformatory and disruptive. And I honestly think the banks do not realize how horrendously disruptive they're going to be. I'm trying to think of a polite way of saying it, and that's probably the best I can do. But it's phenomenal, absolutely phenomenal.
Well, I had a little visual image pop into mind earlier, thinking about the banks and Libra or whatever form it ends up taking. It's like dinosaurs grazing in the jungle, and then they look up and there's this comet, you know, this meteor heading towards them. It's like, what is that? You know, then they go back to eating. It's like, could be like that. You know, it depends. Some of them will get it and get on board. Some won't.
Yeah, I mean, I've talked to a lot of bankers, and I think they actually have a pretty good idea of what's coming, right? But it's some classic innovation theory stuff, right? Like, if you're the incumbent, it's very hard to know what to do to deal with the disruption. And it's, you know, and you've got a lot of incentive to ignore it as well. I'm just going to slightly jam on something that you were saying, Tim. So one of the things that's, I think, really interesting around Libra is it's not a simple cryptocurrency, right? It's not just about Libra. That's a big part, but it actually puts the tools to create currencies and financial instruments and programmable money into the hands of everyone, right? So the same tools that they use to make Libra, the cryptocurrency, are there as first-class citizens in the Libra ecosystem, technically, and you use the same tools to make whatever you want on top of that. So whether that's a programmable transaction, whether that's a smart contract, whether that's your own financial instruments, you can make that using the same tools that they're making that, and you can run that on the network. Now, if you look at Ethereum, right, which is an amazingly innovative attempt to create something like that, we know that it has some problems that it's trying to solve. Some of those problems include it's very expensive to build dApps on top of Ethereum, and that means that a lot of otherwise really cool use cases just aren't financially viable. A lot of product companies that have tried to build on top of that, they can't create enough value to overcome the cost of running it, right? Which is a really, really big problem. Secondly, Ethereum, is itself a first-class citizen in its own ecosystem, but all of the other tokens that are built on top of it don't have access to the same tools, right? And that means that you have this problem where it's really hard to make reliable, safe, financial instruments. What happens, right, is you want to put something out into the world and you make it, there are a bunch of security vulnerabilities, you need to hire auditors, they've got to go through it with a fine-tooth comb and they might miss some things. And so what that does is that massively raises the bar for anyone to safely use it. That happened out of the gate with the DAO hack, right? It continues to happen. You need to be able to trust your money. And so in order for us to get to the point where we can trust it, we need something that will enable that to happen. So that's one of the things that's interesting about Libra, right? Is that they've designed Move, their programming language, from the ground up in quite an interesting language. It's based a little bit on Rust. It makes it very, very hard for you to be able to make vulnerable contracts in a lot of ways, right? That it's really easy to do in Ethereum. And that, I think, is not widely talked about outside of technical circles, but I think that that language, right, that could be applied to other cryptocurrencies as well. It's open source, right? Like, somebody could make an open source Libra with that if they really wanted to. Or they could run it on top of the Libra infrastructure that's being made and led by the Calibra group, which effectively has a bunch of very large companies who are going to more or less be paying for that network to operate, right? And they have a financial incentive to do that. So that opens the door for some very, very interesting things. Imagine being able to create financial infrastructure that's programmable and automatable, that can be integrated. Not like, banks are running really, really old school servers and they've got a bunch of people in the process, but where that's genuinely operating as a network. And if you want to integrate with it, it's all public. You can integrate it with it. You can write some code. You can do some stuff with the money. You can do that at point of sale. You can do that for payment remittance, but you can also do that for anything that involves money, right? You can actually do that on that network, and you can do that more or less for free. That's what we're actually talking about, them trying to roll that into the world. If they succeed at that, or someone else succeeds in doing something similar, that will completely transform the way that the financial system works. It will completely transform the role that banks have to play. It will completely change what's possible in payment systems, in taxation, in point of sale, in social welfare payments, right? And anything else that you can imagine. Completely change it. And that might happen in the next few years. It might take a decade to do, but one way or another, someone's going to do that, right? And so this is the next experiment. Libra is the next experiment in seeing that happen, and it might be the experiment that sticks. So we should all be a part of that, right? And see what we can do to drive it and make it good.
Yeah, I'll just make one point. I've talked to a fair few people in the crypto community, and of course a lot of them, and particularly those that have been around for a while, have when are these banks going to see this change, and why aren't they actually embracing, etc. But one thing I'll make it clear to everybody here, and we're having the conversations with the big end of town in banking, right down through to the neobanks. They fully understand the implication of what the Libra proposition represents. So to understand this, the heart of a bank is a transaction deposit. That's how when you value a bank, that's where you start. That's the first question you ask as a bank analyst. When you know that has the potential to shift in a very large way, in big numbers, you only have to look at the reach of the consortium and what's being proposed, is that has the attention of the banks. Believe me, it has the attention of the banks. So they're asking, what do we do? What do we do? The first problem that the banks have in our system, at the big end of town, is that physicality. Branch numbers have to come down very substantially. ATMs numbers will have to come down very substantially. So these are not easy conversations, but you can see it. You look at the banking results, look at the headlines. We know it. Money's evolving. How do we do it? You go talk to a neobank who's actually approaching all the millennials and going, we've got a real sexy front end that works great. Libra is like a natural fit for that conversation. So when we are engaging with the regulated players, Luke and I come from the regulated mindset, running a fund, and it is the regulated players who are engaging in this conversation, believe me, because it is important. They can see that up until now, like Bitcoin and a lot of these other things are just too small. That this does change things. So I just want to reassure those in the crypto I know we've encountered a few people who have been a bit frustrated because they've been on the campaign for a while. But as always with innovation, there's catalysts. And this is why when you look at the association, the way it's set up, and the genie's out of the bottle, and you can see that conversation is going on behind closed doors. And a lot of it's around, really for many, is around, particularly the big end of town, they just really haven't contemplated this happening this fast. And that's probably the thing that's sort of coming through very clearly, that they're trying to get their head around. How do we actually approach this? And of course our conversation of that is, get in under the tent, be a part of the group, be a part of the conversation. That way is what Rob's indicating about, and Tim's discussed, was discussing here, is that you can be part of the creation of where it goes, the start of something very significant. And we've got a very forward-thinking financial system. When you look at it, we're so overweight financial services just because of the success of our system. And for a small, open country, we are one of the most overweight of disruption. So when you think about, if you're a journalist, you don't have to. You know what happened when global digital media hit the analog media on our shores. What happened with that conversation? Financial services is a little different, but there's conversations going on which are very similar in nature to this. And you can see why Libra is approaching this, as Tim was sort of alluding to before, and etc., is the embracing regulations, wanting to work with everybody because they want a safe system, a system that's well understood, a system that's got the checks and balances actually in it. We see an evolutionary conversation. This is what Luke's talked to me a lot about, how it works with government and policy. You got to remember, if Scott Morrison and Josh want to come out and start supporting what they do, and they've been on the record saying they support distributed ledger technologies and etc., but you need to do it in a way that's evolutionary as opposed to revolutionary. And there are lots of opportunities that you can come out of this if we have an evolutionary approach to embracing the innovation.
Yes, my apologies for my facetious metaphor there for the bankers in the audience, but look, it is a case that there are these regulations in place to protect us all as consumers and deposit holders, and the banks obviously are greatly constrained, but they are watching, as you say, and they're very aware, and they do have their innovation teams looking at blockchain projects, pilots of various kinds. Tim might want to pick up on this as an ex-banker yourself, and having been in blockchain now for several years. What do you see some of the opportunities for banks potentially, or if you want to speak to that, or is there another aspect that you think is worthy of consideration at this point?
I'm going into the deep recesses of PTSD when you talk about being an ex-banker,
Sorry to bring it up.
Yeah, I know. I've had therapy. I'll get over it. I think the banks absolutely have to embrace it as far as possible. But I think they have to find the niches where they're relevant. The overall blockchain tech is disintermediating a lot of trust, not completely removing it by any means, but I think they have to find their point of relevancy. And I think this technology and others, AI and RoboVice, a whole variety of stuff, are just gradually removing their relevancy. In my opinion, I would actually say within 10 years, probably 50% of the banks that we know globally will no longer be in business. They'll either be merged or they'll go out of business. I just think that the transformation is just going to be so dramatic. Not that I worry for bankers, but I think they have to have the wake-up call, and I think this is the one that they need to face.
You've coined the term transruption with respect to this, that they have the opportunity to be disrupted but transform along with the disruptive wave.
Yeah, it's very much. The cryptocurrency community often. And I've owned cryptocurrency, so I'm part of that, I guess. A lot of the ethos has come for the idea of, screw the banks, get rid of the banks. We're far better. Bitcoin or Bitcoin Cash, best thing ever since sliced bread. And that's sort of destruction of the banking sector. And then you've got the reality of where the whole space is, that it's an intrinsic part of our fabric, and it's about how do you actually transform that structure of the fabric and transform it using disruptive technology. And that's what I've sort of termed as transruption, as a sort of that blended metaphor. And I think Libra has that structure because they've taken on board relationships with MasterCard and Visa and Stripe and PayPal and some very high-profile names. But they're actually embracing the transruption, the transformation with those guys. So, yeah, I think transruption. Yeah, the chances of completely annihilating the banks, it's lovely in theory, just in practice. 0.5 of, Rob, you'll probably know better than this, but sort of 0.5 or 0.6% of the population own crypto and probably understand crypto, and the rest is, is just a bit of noise. But I just think, totally annihilating the banks is not going to happen. I don't think.
A couple of things I want to explore that we haven't really got into too deeply yet, and I guess we've talked a lot about the opportunities. We haven't really delved into the challenges so much, and the tension between the need for regulatory protections and compliance versus people's right to privacy, or the perceived right to privacy. Do we still have a level of privacy in this current digital age? What about this dynamic tension that we're facing globally? And that might be something that, Luke, did you want to perhaps remark on that at all?
I might just switch a gear.
Yeah, sure.
One of the things that I did want to make a comment on is it was only a couple of days after the Libra announcement that China had come out and said that it was getting ready for its digital currency. It was only, I think it was last week, that they said that they were ready to go. That's interesting. He who controls the global currency controls a great deal. And so in one sense, Libra is a bit of a global play. And so there'll probably be a lot of stuff which will unravel out of that, and a lot of transruption that certainly may occur as countries compete against countries for everyone's currency. Very interesting.
Thoughts on that? Well, yeah, it will. Well, I've just observed that obviously, the great power of the 20th century and through to now is the United States, with their massive industrial capacity and output, and the establishment of the US dollar as the global store of value, the reserve currency globally, and everything is priced in USD. So you can understand the concern that some of their lawmakers and regulators have, looking at something that might appear to be a potential threat to that hegemony. And that's a fascinating thing, but it's less tangible perhaps than them looking at say oil and the pricing of oil in US dollars and the petrodollar. How do you start to point at what could be a basket of global currencies that becomes something a little less defined, a bit more amorphous, harder to perhaps maintain a level against? That's going to be interesting.
Yeah. Just one quick thing about the privacy issue. Heath, correct me if I'm wrong, it was Caitlin Long. What state was she from that made that? Wyoming, thank you very much. Yes, very, very good. Their concerns wasn't so much that the big corporates had all of your privacy data, but ensuring that governments don't. That's a very interesting conversation, because governments have a lot of your data anyway. If you have a driver's license, a passport, you submit a tax return, you have a title to a property, pretty much anything, guess who has that? Governments. So that was a very interesting observation from her part. I know there's a lot of conversation around Facebook and privacy issues. They're all important, but it kind of needs to be balanced out with where's the rest of our data going. Interesting.
Yeah, so in Australia we had the AA bill legislation passed late last year, and I know personally a number of people that are moving their tech companies offshore simply because they can't see how they can feasibly meet the data disclosure requirements and still build a product that people want to use. So that's an interesting challenge as well in itself. Rob, have you got thoughts on that at all?
Libra is obviously it isn't some things, right? So it's not a decentralized cryptocurrency, not in the sense that, say, a Bitcoin is. So Bitcoin sort of resists control, which is, I guess, a property that some people want out of that, to have a censorship-resistant currency. That means that you have protection against somebody that you don't want to control your money. Now, governments are in the business of being able to regulate people's money, and that's very important for society as well. If you look at Libra, it's not decentralized. It's more a little bit like, I guess you could think of it like a democratic, in a sense, right? It's a democratic consortium of organizations that have a vote and a say in how it runs. But I don't think it'll stop there. I mean, I think for something like Libra to get off the ground, it'll have to go several steps further than that. And I think that's just an early draft. But what it's never going to be is a decentralized, censorship-resistant cryptocurrency like Bitcoin. If you think about what it is trying to solve and what it's not trying to solve the same set of things. Now, some people would argue that Bitcoin with the Lightning Network is an attempt to achieve the same thing as Libra, perhaps, and some might not. It is, I don't want to wade into that subject because it's a pretty big contentious one. But one way or another, we're gonna need digital currencies that are going to be able to, that are going to be rich with data. Now, I'm not sure that. I think that privacy is going to be one of the biggest subjects of the next 20 years, right? So we're going to need to figure that out regardless, no matter what technology platform we deal with. And there's a growing awareness that the amount of data that corporations and governments have on people is a problem. So this is our opportunity to have a voice in that conversation. Whatever you believe is important, if we're not at the table, we can't shape it. And if Australia's not at the table, we can't have an influence over what comes out the other end. That's why we're doing this, right? We're not doing this because we think, decentralized versus centralized. We're doing this because we see this as being a really likely to succeed attempt. And we want to make sure that we have a voice in that, right? So if you talk about challenges, that's the big one. How do we have a voice in shaping this into being something that we all want to exist? And I think that's my segue to you, Heath.
Yeah. It's kind of interesting. There's was talking about global currencies and what's happening at the moment from a financial market perspective, where you can see this, that Australia is a small open country. We get sucked into the vortex of what's happening with particularly what happens with the Federal Reserve. So if you had told me that the 10-year Australian bond was going to be 0.89%, I wouldn't believe it 10 years ago, but we're sat at 6%, and here we are. The whole name of Holon is really actually is predicated on these two systems, which is the system Rob's talking, everybody's aware of, is Web3, with what's happening with market-based money, sound-based money, versus actually centrally planned money, which is what we're probably going to go through a few tests with that in the future. You can see that with some of the way regulators are responding, even in Australia. You see some of the conversations even today in the newspaper, where the New Zealand regulator and banking wants a lot more capital to be held. The Australian regulator is going to start de-recognising some of the capital that's held in New Zealand, as everybody kind of sort of says, well, what happens if things go the other way? And we know that conversation's a lot, and there's many debates actually around that. But again, it shows you it's like we're a small open economy, and we will be eventually impacted by these things. There's going to be, and we've got, one thing I do believe is like the system is far more robust than what it was 10 years ago. So all the strengthening. So I don't thinking, you kind of ask yourself where the next major issue is going to come, but there's a lot of strengthening that's gone on in the system from where we were. So we can weather a lot more. The system's in good shape to actually allow transformation to actually occur. That's what I'd actually say that's probably the thing that I take away. And I'll give you an example. So 10 years ago, CBA's return on equity was like 24%, it's cash return on equity. Today it's 12.5%. Now everybody here in this room says, CBA is earning a lot more money. They are earning a lot more money, but a lot more capital's gone in to protect the whole system. Substantial amounts of capital, substantial amounts of working on tenure, the maturity transformation, all those things to actually de-risk the system very, very substantially. But there's no doubt that again, that Libra conversation, I believe, it's going to actually generate a fast track a lot of these conversations around currencies and central bank digital currencies. And again, this is why the importance of us is getting involved and understanding and educating Australians around what the potential impact can be if we want to maintain our financial system. I mean, a lot of people, our leadership and our good economic track record of 30 years. So, and remember at the moment, we've benefited, you see this, iron ore, LNG, big contributors to our economy and education. But we all know it's kind of, and this is one of the things that we're wanting to promote with this discussion with Libra Australia, is that we're talking to universities and others about actually trying to get a linkage between the big end of town to put money into actually the education and the innovation, which we really lack in the country. Some way, it's kind of sometimes the innovation that the lack of it is a result of just dominance of certain companies in certain sectors. It's just because we're a small economy, and you go to New Zealand, it's the same. But you go to bigger open economies, it tends to be that dynamic is different. So yeah, I think if we don't actually at least engage in the conversation, there's kind of like and just if we let it happen to ourselves. And I see this so many times, when we're looking at companies to invest in, sometimes you look at two companies and you go, what's the difference between the two? A lot of it's actually mindset and attitude. That's what it comes down to. And you can see the difference, and that's what actually defines how one company can be successful with the other. Everything may look the same between the two companies, but it's just that mindset and approach ends up being the one that really defines the one that actually can see has the seeing eye where things actually